Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY traded around 97.9, holding steady despite growing concerns over the US labor market and broader economic momentum. Recent data showed job openings falling to a 2020 low. January layoffs at their highest since 2009, and jobless claims rising well above expectations. Weak ADP private employment data added to caution and reinforced expectations for Fed rate cuts, with markets still pricing in the first cut in June and another round in September. Despite these headwinds, rising US 10-year yields and safe haven flows into the dollar and treasuries have provided some support to the US dollar. Technically, the dollar remains resilient, trading well above the short-term moving averages, suggesting some sort of bullish momentum may persist after the brief consolidation. Next up, let's talk about crude oil. WTI dropped around over 3% to around $63 per barrel, snapping a two-day rally as easing geopolitical tensions and demand concerns weighed on prices. Iran confirmed upcoming talks with the US in Oman, reducing immediate fears of supply disruptions and trimming the Middle East risk premium on crude. Weak US employment data also raised concerns about slowing fuel demand. Despite this pullback, uncertainty around US Iran negotiations and renewed attacks on energy infrastructure in Ukraine means some geopolitical risk remains priced in. From a technical perspective, oil remains range bound, with recent moves viewed as corrective rather than a break off trend. Next up, let's have a look at gold. Spot gold traded near 5015 before retreating as a firmer US dollar, and profit taking followed the recent record rally. The sharp sell off from highs was largely driven by forced liquidations and the unwinding of crowded speculative positions rather than a shift in the fundamentals. As volatility eased and the dollar softened, gold rebounded strongly, indicating oversold conditions. However, technically, last week's bearish key reversal and weakening RSI suggest that buyers are losing momentum, and price action around key psychological levels will be critical in defining near-term direction. Lastly, let's have a look at the Australian dollar, which hovered around 69.40 near a three-year high, supported by a hawkish RBA outlook and stronger trade balance data. Australia's trade surplus widened in December, driven by rebounding exports and softer imports. The currency continues to benefit from expectations of further rate tightening, with markets still pricing in a high probability of another hike in May. The Australian dollar eased slightly as the US dollar strengthened following shifts in the Fed's expectations. The pair remains near recent highs, with upcoming data likely to dictate whether momentum will resume or consolidate. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.